We just heard from Robert Frank about the possibility of higher tax rates under a Biden administration. Are sellers in any sense being motivated to make a deal now to avoid higher taxes later?
Absolutely. So nice to be back. That is certainly one of the things that is driving deal flow right now, which is people who own assets, particularly entrepreneurs, family-owned businesses, who sense that we are going to clearly see a rising rate environment, are looking to monetize those assets now.
They want to sell now and book the profits. 5,500 M&A deals through private equity so far this year. That is a record pace, though I guess the total dollar value of those deals may be a little bit lower. Why has it been such a rich year for private equity PE deals?
Well, there's a couple of factors going on here. One, you basically lost all of the spring and early summer. So we saw deal volume plummet, go down to near zero. Now we're seeing that kind of rocket back up. And so you have a mix of both the tax changes that people are expecting. You also have a tremendous amount of capital that's been sitting on the sidelines. And as you know, this is an asset class that measures itself, rightly or wrongly, using IRR. And so having that cash drag by not getting those dollars to work is a real mistake.
How much capital is on the sidelines waiting to be put to work so that they can generate some IRR above the rate of cash?
$2 trillion is what's sitting right now in dry powder. So what's been really interesting is that most people had expected that private equity fundraising would really fall off given the pandemic. People couldn't travel, couldn't meet with people in person, and that just has not proven to be true at all. So while spending is up, fundraising has also continued to be very strong.
What I'm hearing from some people who are in the deal business is that deals are getting done very quickly, in part because everybody has to do it virtually and things move at a greater speed because you don't have to wait and book the airline flight and whatever the hell it is that you have to do. Where do you expect the next wave or the continuing strength to be in terms of sectors? Is it technology? Is it healthcare? Where?
Well, both of those have continued to be very strong. Also, there's been a tremendous resurgence in kind of good old-fashioned do-it-yourself businesses, gutter businesses, home project businesses, auto repair businesses, things that you can actually do in your free time now in your home. We've seen a huge uptick in that kind of retail-oriented sector as well.
And private equity would be going out and buying Manny's Body Shop? No. What are you saying?
In some cases,
I don't get you.
Well, in some cases, they actually are. So you're seeing oil change businesses and things like that. But you're also seeing businesses that are much more geared towards the consumer. Things that you can purchase perhaps online or at a local retail store that you're going to come home and actually do that project yourself in your own garage.
Eric Hirsch, always good to see you. Thank you.
My pleasure. Thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.